Let us see the next question. Messrs. Corpus and MNC, AMC, that is Asset Management Company, on 1st of April 2015 has floated two schemes, namely Dividend Plan and Bonus Plan, that is Dividend Reinvestment Plan and Bonus Plan. Mr. X, an investor, has invested in both the plans, that is both the schemes. The following details are available except the issue price. Solely issue price information is not given. Date, dividend plan, in that the rate of dividend is given, and for the bonus plan the bonus ratio is given. In case of the dividend plan and bonus plan, the question is like having a question mark for the issue price, that is not given to us. Then we have been provided with the information regarding the bonus dividend bonus. Again dividend, 31st of March 20, that may be the date on which the investment would have been redeemed. Last NAV is given. Additional details, investment of 9,20,000 made in the dividend plan and investment of 10 lakhs is made in case of bonus plan. Amount of investment is given to us. Average profit means average profit per year, that is what we have to understand logically. And average yield means average return per year, that is given to us. You are required to calculate the issue price, which is not given to us in the question, of both the schemes as on 1st of April 2015. That is a question. So from this information we are required to determine what must be the issue price of both the plans. Please go through the question. So friends, over here in this very good question, the question is providing to us, let's say you're required to make the computation of the return for, you're required to compute the NAV at the time of the initial offer in case of the dividend plan and in case of the bonus plan. So let us work out the answer for the dividend plan first of all. Head on heading dividend plan. First of all friends, over here, whatever the information which is provided to us for the dividend plan, let us say understand it. Date, that is 1st of April 2015, that is the date on which the investment is made. The amount of the investment is 9,20,000. Then information is provided to us that 3 times the dividend have been given. It is 31st of March 2017, 31st of March 2018 and 31st of March 2019. These are the 3 dates on which the dividend have been given. The rate of dividend is 12%, 10% and 15%. That is the dividend. The question is not providing the face value. So let's we'll assume that the face value is, let us say 10 rupees per unit. So in that case the dividend would be 1 rupee 20 paise per unit, 1 rupee per unit and 1 rupee 50 paise per unit. Of course it is like the dividend per unit, say at the price which is based on the number of units that you are holding at the time of declaration of the dividend. Then we have been provided with the NAV on the respective dates. That is on 31st of March 2017, it is 48 rupees per unit. Then 31st of March 2018, it is 50 rupees per unit of the dividend plan. And on 31st of March 2019, it is 45 rupees per unit, say for the dividend plan once again. Apart from this, say one more information which they have given importantly to us is say about the average profit that is provided to us. So investment, and I'm writing one more thing, that is average profit. The amount of the average profit is 27,748.60. Okay. This is what's the information that we have. Now, logically we understand that we have the average profit per year 27,278. Kindly use a calculator. 27748.60 into time period of holding investment is 5 years. Okay. The number of years for which you are holding the investment is 5. Very simple to understand. It is 1st of April 2015 to 31st of March 2020. So 27,748.6 into 5. That is the way we can compute the total profit. It is 1,38,743. This is the way the total profit is found. Okay. Now we understand that if at all we have the total profit, we have the investment, then in that case we can compute the redemption value. You don't have to write anything, let me explain you. Redemption value will be equal to investment plus profit. Of course, over here the tax or STT, no such information is required to be considered. So plus 9,20,000. So it is 10,58,743. Then on the last date, that is 31st of March 2020, NAV per unit is given as 49. So we understand that based on this you can compute the number of units redeemed. Number of units redeemed 1058743 upon 49. So that comes to 21,607. This is the number of units that redeemed. This is what we understand. Now friends, importantly, what do we understand? We understand that we have got the number of units on the last date on which we have redeemed it. We have been provided with information that what is the dividend per unit, what is the NAV at that point of time. So what we are required to do, we are required to do backward working. And based on that, we are supposed to make the computation that what must be the initial number of units that would be allotted to us. For example, just like I want to tell you that for example, that the number of units allotted to initially was 9,200. Then 9,20,000 upon 9,200. That is the way the NAV per unit can be found. If at all we do the backward working and we find that for example 10,000 number of units were allotted, then in that case 9,20,000 upon 10,000. That is the way we can compute the NAV per unit. This is what we understand. Now giving you some explanation for how to make the computation of the backward calculation. You can see that the dividend per unit is 1 rupee 50 paise. Fine. So let us assume that X number of units that investor was holding before the declaration of dividend. So what will happen? 1.5 into X. This is the amount of the dividend. Okay. Divided by NAV 45. So this is the way we can compute that what is the number of units which have been allotted. This is the initial number of units. This is the additional number of units. And total of both of them is 21,607. With that we'll compute the X. That is the number of units so that the investor will be having before the allotment of the units on that particular day, that is 31st of March 2019 in our example. So what will happen? It is 45x plus 1 rupee 50 paise X divided by 45 is equal to 21,607. Now we understand that this is 46.5. So what will happen? 21,607 into 45 is equal to 46.50x. So as far as x is concerned, it is 21,607 into 45 upon 46.5. So please use your calculator. 21607 into 45. Whatever the answer that we have divided by 46.5. It comes to 20910. So we understand that say that 20910 deducted from 21607. That comes to 697. So we understand that say at this point of time 697 units were allotted. Okay, this is the way we are required to go backward, and based on that say we are required to make the calculation of answer. Now we are writing answer systematically. I request all of you to write down answer along with me. Working note number 1, calculation of time period of holding investment. First of April 2015 to 31st of March 2020. So it is 5 years. That is the way first of all the time period of holding investment is found. Working note number 2, calculation of number of units that investor redeemed on 31st of March 2020. It is number of units into NAV per unit is equal to investment plus profit. What is number of units that is required to be found? So I am assigning x variable to it. NAV per unit on the last date, it is 49. Amount of investment is 9,20,000. Plus the profit is 27748.6 into 5. So now x will be found as balancing figure. So x is equal to 9,20,000 plus 27748.6 into 5. That comes to 1,38,743 upon 49. So plus 9,20,000. So 10,58,743 upon 49. The answer is 21,607. This is the way, so the number of units redeemed by the investor is calculated. With paragraph write down, assuming that face value per unit is rupees 10, comma, answer is calculated. Date, NAV per unit, units allotted balance units dividend per unit. So please prepare a table like this. So friends, we understand that 1st of April 2015 was the date on which the investment was made. What is NAV per unit is required to be found. What is the number of units we do not know. Dividend per unit is dash. Then we understand it's the 31st of March 2017. The rate of dividend is given as 12%. So dividend per unit can be found as 1 rupee 20 paise. That is 10 into 1, that is 12%. That is the way it can be calculated. Then 31st of March 2018, 10% is the dividend. So 10 rupees into 1, that is 10%, and that comes to 1 rupee per unit. And 31st of March 2019, in that case it is 15%. So 10 into 15%, that comes to 1 rupee 50 paise per unit. So that is the way the dividend per unit can be calculated. On the last date, the balance units have been calculated by us 21,607. This is what we understand. Okay. Now, NAV per unit is provided to us on 31st of March 2017. It is 48 rupees per unit. Then it is 50 rupees per unit. And say it is 45 rupees per unit. This is what we understand. Now we are required to start with the process. Next, calculation of units allotted on 31st of March 2019. In that we understand units before dividend plus units allotted is equal to balance units. This is what we understand. Let us assume that this is to be x plus this is 1 rupee 50 paise into x divided by 45 rupees per unit is equal to balance units. Balance is 21,607. That is the way we are required to compute the x. So what will happen, friends? Over here it is 45x plus 1 rupee 50 paise x upon 45 is equal to 21,607. 45 plus 1.5 is 46.5. X is equal to 21,607 into 45. So x is equal to 21,607 into 45 upon 46.5. That is the way the x will be calculated. So 21607 into 45 upon 46.5. That comes to 20910. This is the number of units that the investor will be having, before the bonus. Before dividend. So the units allotted will be calculated like this, that 21607 minus 20910. That comes to 697, and over here it is 20910. This is what we understand. Now I want you to calculate that what must be the number of units allotted at this point of time. Now again friends, we are required to adopt the same process. We understand that the dividend per unit is X. So the new heading is number of units allotted on 31st of March 2018. In that, units before dividend plus units allotted is equal to balance units. Okay. What is the number of units allotted? That is say the number of units before dividend. Let us assume it to be X. X into dividend is 1 rupee per unit. So X into 1. And on that date we can see that the NAV per unit is 5050. So X number of units into 1 rupee per unit is the dividend amount, divided by 50 is the number of units allotted, plus initial number of units X is equal to 20910. That is the number of units allotted, that is so the number of units after allotment of the dividend. So again solution of this is very simple. 50 into X plus X is equal to 20910 into 5050. So 51X is equal to 20910 into 50. So X is equal to 20910 into 5050 upon 5151. That is the way we can compute the answer. 20910, okay, into 5050 divided by 5151. So it comes to 20,500. So this comes to 20,500 number of units. So what would be the number of units allotted? Let us understand. 20910 minus 20500. So that comes to 410. And this is 20,500. Again, we'll make the computation of the number of units allotted on 31st of March 2017, and the dividend is 1 rupee 20 paise per unit. I want you to make the calculation of the number of units allotted, say at this point of time. Next, write down units allotted on 31st of March 2017. In that we can again the form same equation. Units before dividend plus units allotted is equal to balance units. Okay. Now units before dividend, let us assume it to be X once again, plus X into 1 rupee 20 paise upon 48 is equal to, the balance is 20500. That is the way we are required to compute the answer. So it is 48x plus 1 rupee 20 paise x is equal to 20500 into 48. So 49.20x is equal to 9,84,000. So x is equal to 9,84,000 divided by 49.2. That is the way we compute answer, 20,000 number of units. Honestly, whenever we get this kind of like the answer, we get confidence that our answer is going in the correct direction. When we get the say this kind of like proper answer, so 20500 minus 20,000, so 500 number of units must have been allotted, and the balance units would be 20,000. This is of course 20,000 itself. The allotted itself is the balance. Amount of investment was 9,20,000 upon 20,000 number of units. That comes to 46 rupees per unit. This is the way NAV per unit can be calculated. So this is the way we can make the computation of the NAV per unit. That is, say the price at which the units must have been allotted to the investor. So preparing a small working note for the same. Calculation of NAV per unit at the time of initial offer. It will be calculated as amount of investment divided by NAV per unit. Amount of investment is 9,20,000 divided by 46. So divided by 20,000. That comes to 46 rupees per unit. Now in case of the dividend plan, we had to make a big working, but in case of the bonus plan, the things are not going to be so complicated as what we have right now. So let us start with the bonus plan. Of course, we don't have to prepare the first working note, that is the time period of holding investment. It has already been prepared, that is 5 years. Directly the second working, with that so we can start. That is working note number 1. Number of units redeemed by investor on 31st of March 2020. I request all of you to put in the chat box that what must be the number of units that would be redeemed on 31st of March 2020. Chalo, the answer is that is now very simple for us to understand. Number of units redeemed into net asset value per unit is equal to redemption value, that is investment plus profit. Okay, now this is required to be computed, so let us assign x variable to it. Now as far as the bonus plan is concerned, in that the last date the NAV is 44 rupees per unit. This is 44. The investment is made for an amount of rupees 10 lakhs and the average yield is given to us as 6.4%, and of course we have to understand is the average yield per annum. Okay, so 10 lakhs plus 10 lakhs into 6.4%, and time period of holding investment as per the first working note is 5 years. So now x will be found as 10 lakhs plus 10 lakhs into 6.4%, that is 64,000 into 5 years, that is 3,20,000 divided by NAV per unit 44. So 13,20,000 divided by 44. That comes to 30,000 number of units. So this is the number of units that the investor would have redeemed on the last date. Now based on that, so the second working note number 2, in that calculation of units allotted. Okay, now this time you can see that there are two dates on which the bonus units are given. So I'm writing over here date. We know that, say, over here the dividend rate is not there, so units allotted and then balance units. Initially the units must have been allotted on 1st of April 2015. Next is 31st of December 2016, and the next is 31st of December 2018. Okay, now the balance units on this date is 30,000. Okay, that would be the number of units that we will be having, say, on the last date on which the redemption is made. So again we are required to do the backward working for doing calculation. I request you to put, that is prepare a working note to compute that what must be the number of units allotted on 31st of December 2018. So calculation of units allotted on 31st of December 2018. Prepare this working note on your own and put your answer in the chat box. So friends, over here on 31st of December 2018, bonus ratio is 1 for every 5 units held. So we understand like this. Units held before bonus and afterwards units held after bonus. What is the ratio of 1 for every 5 held? So suppose you were holding 5 number of units before, then after bonus issue it will be 6. 1 for every 5 held. We understand that, say, after bonus it is 30,000. So before bonus it would be this number of units. So it comes to 30,000 divided by 6 into 5. That comes to 5,000 into 5, 25,000. Okay, so this is the number of units that you are holding, 25,000. And of course we understand that, say, 25,000 into 1 by 5. That comes to 5,000 number of units. So 25,000 plus 5,000, that comes to 30,000 number of units. This is the way we are required to do answer. I request you to make the computation of the units allotted on 31st of December 2016 and put your answer in the chat box. So friends, over here it has been given that the 1 for every 4 units held. So again we are required to work out the answer like this. Units allotted on 31st of December 2016. Units held before bonus issue and units held after bonus issue. 1 for every 4. So suppose you are holding 4 number of units before, then afterwards it is 5. How 5 is calculated? 4 plus 1. Now after bonus it is 25,000 number of units. So before bonus it would be this number of units. So the answer is 25,000 into 4 divided by 5. That comes to 20,000. So this is the number of units that you are holding, say before the bonus. That is what we understand. So this is 20,000. So 25,000 minus 20,000. That is say 5,000, or otherwise 1 for every 4. So 20,000 divided by 4, that comes to 5,000. This is the way you can compute the answer. 1 for every 4 into 20,000. Again, this is the balance that you have on April 1st, 2015. Now you have made investment of 10 lakhs. 10 lakhs upon 20,000 will give the number of units, will give the NAV per unit. So the final answer, calculation of net asset value per unit on 1st of April 2015. It is amount of investment divided by units allotted. So over here, amount of investment is 10 lakhs divided by the units allotted 20,000. So that comes to, I think, say 50 rupees per unit. That is the way we are required to make the computation of answer. That in case of the dividend reinvestment plan, issue price must be 46, and in case of bonus plan, it must be 50 rupees per unit. Let us have a small summary of the working that we have done. In case of the dividend reinvestment plan, say we have worked out the answer in this way. First of all, say the time period of holding investment, that's very simple, like the working note. The second is, say the calculation of the number of units that say you would be having on the date of the redemption. In that case, it is an investment and profit. Both of them are added to compute the redemption value of the investment. NAV per unit is say taken as the division, and with that, say the number of units that say you would redeem is supposed to be calculated. It is 21607. Now, assuming that say the face value is 10, because the amount of the dividend is required. This is an important working, say in this entire question. We start with the backward. That is on 31st of March 2019, NAV is 45 rupees per unit and dividend per unit is 1 rupee 50 paise. So 1 rupee 50 paise into X, that is the amount of dividend, divided by 45 is the number of units allotted plus number of units before, like the issue of the additional units. Both of them are added, which is 21,607. With that, so the X number of units have been found. It is 20910. Subsequently, same thing is done. Number of units before the dividend X plus additional. What is additional? X into dividend per unit upon NAV per unit. Both of them are added, and with that, so the balance is found once. So that is once again 20910, means balance is taken. And so on, the calculation is made. With that, say we find that so the initially 20,000 number of units must have been allotted. 9,20,000 upon 20,000 will give the NAV per unit. Next is like the bonus plan, which is comparatively simple. The first working note, time period not required. Second working note, redemption value, number of units say redeemed. That working note is similar what we already have prepared. Next is the again, so going backward. This time the working is simple, 1 for every 5 held. So total is 6, and that 6 is representing 30,000. So what is 5? 5 is 25,000. So 5,000 number of units allotted last time. from 35,000 is deducted and we go backward 25,000. 1 for every 4. So 1 unit of the bonus, say out of 5, that is the way we make the computation of the units allotted on 31st of March 2016. Again we go backward to make the computation of the balance, that is the units allotted to the investor. And that is used as a calculation of the NAV per unit. That is on 1st of April 2015. Dear students, I would like to tell one important thing to you. That's the calculation of the number of units of the dividend reinvestment plan, calculation of the number of units of the bonus plan, taking into account the investment, taking into account the time period of holding investment and investment. Okay, taking all this thing into account and calculation of the return. Calculation of the return. This kind of question they have asked for number of times before asking this question, which was asked in November 2020 examination paper. Based on this information, calculation of the return is what they have asked for number of times. Not less than 5 times. Not less than 5 times. In November 20, they provided return and certain other information, and with that say you had to make the computation of the NAV per unit at the time of say the making investment. What I want to tell you is that in CA Institute examination, this is what say happens number of times, wherein the same concept, same kind of question. However, instead of providing one information, instead of asking one answer, they will provide that in form of information and something else will be calculated, that is required to be calculated by the student. So you should be having the proper idea, let's say how the working is done.